Greetings, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the week, finishing up February 26, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan, and always manage your stop when placing a trade. 2 months down, 10 more to go, 2016. Not sure I could take any more of this uncertainty. Just kidding. This is the stock market. It's all about uncertainty, which makes it an adventure each day. Oh, what an adventure it's been. Sell of January into rally February, which has made the end of the month a questionable window dressing as we approach contract expiration. Or are things actually looking up? In the end, it doesn't matter what I think, or what, for that matter, what anyone thinks. The bottom line is trading the charts in front of you for an intraday trader and being on the side with the highest probability of the setup continuing to trend. To that fact, I was put to the test almost each session this last week on the futures. With the Sunday opening gap up significantly last week on all four indices, the chase was on to break through upside, grabbing the 50, possibly the 200 period moving averages, or just simply turn south and close out the gaping wounds left from the previous Friday's close. The ultimate test was sitting through and with much patience waiting for the setup that would run. Which one would it be? Only and only when the charts lined up would I enter. Were there setups that caught me? Sure. Were there setups where I was so set that price action would run? Sure. Did they all work out? Nope. However, the ones that did paid off substantially in ticks, and as a trend trader, regardless of which indicator you use to identify a strong trend, would have kept you in. So, Jedi traders, go ahead, check out the trading session focus for the ES, week number 8 of the month. There you can find on TradingFibs.com each week, whether it's the outlook or the trading session focus, a little bit of a review in addition to the daily tweets that I send out. Let's go ahead and take a look at where market actually left us last week. As we could see here, we talked about those gaping wounds where the market gapped up not only from Friday's session, which I'll show you here in a little bit, but we also had open gaps from the previous session as well. As you can see here on the ES. Crude not as much, not too bad, but ES with its gaping holes there, market action will eventually return and close those out. There was the NQ and the TF. You can see very much similarities between these two and the YM. So that was last Friday's close, February 19th, as price action. So with two gaps down, two open gaps, the question again was, were we going back to the upside, or were we going to come down and close out these gaps as seen below? All right, so let's jump right in first to market profile. As we can see, price action here for the week lifting up. We'll show those gaps here in a second on the market profile, but on the volume profile, pretty nice structure, not too bad, a little bit of outlier. Again, what looks like a good volume profile is when you have market action outside the 70% range. Again, I prefer the volume profile over market profile, as it represents how much volume was traded at a certain price versus time. 70% of that time represented by the orange part, and then the purple. So a structure, a good market profile, a good volume profile structure would obviously be price action above value area, price action below value area, and then establishing value somewhere in the middle, as we can see here, finishing up Friday almost at the highs of the week. Out of all the 5 volume profiles that we see here, TF up here, YM on the left, NQ and ES in the middle, and crude on the right, we can see the 4264 on the NQ. As the NQ rose at the end of the week here, is a 600-day macro volume point of control. So over the last 600 days, market action has a mean around this number. So going into next week, we'll surely keep an eye out for that. Again, like daily gaps, we have open points of control both above and below. Why do I watch these? At any given point during a trading day, the point of control could be a target, could be a level that we work, that we trend to, or perhaps we just simply bounce off of. Now, let's go into the market files we just showed here before. Let's start with the TF. The TF, remember, from the previous sessions, we had those open holes in price action that you saw there on the 19th. Here in particular was run. Let's go ahead and show you where that was. Here it is. So Friday's price action. Again, the chart here on the February 19th picture was price action over here, 217, 218, 219. So we got that open hole, and then does price action come back and close that? Absolutely. Price action, I'm sorry, I apologize. That's actually the open gap from the 19th upside. That was the one. So here it is. This was the gap. There we go. So from the low to the high, an open gap. So price action started out on Friday. Actually, we had closed that. We had closed that gap from the 19th. I apologize for that in the former picture. So the 19th, closing out that gap and then lifting up here on that Sunday open, as just mentioned here, with a weekly opening price here at 10.17.2. So we are already above the daily gap from last week, and to a rise up here around 10.35.5. So there's our range for the week. Again, Wednesday being the big day here, price action moving upwards Thursday, and then Friday kind of settling into some value here. You could see this gap finally being closed on the next day. So Monday price action, Tuesday closes that out, and then lifts Wednesday, Thursday, and Friday. And notice the dashed lines are previous moving averages. So again, before we get into next week's session, I'll go ahead and clear all those out. So the lowest number we have downside at this point, 951.8, 968. So again, we still have obviously repair upside from the previous weeks of January and the downfall, but market action still has room to come back down and take care of unfinished business. Let's jump right into the YM, as we had similar picture. We had those open gaps that have been cleared right now from previous sessions. Excuse me. All right, there we go. That was an open gap right there. Closed out this week on the 24th. So we go ahead and we erase that. And so again, existing gaps still down below there. But this week's price action, again, not much of a rise here on the YM, 16.513 to close out here at around 16.601. Again, that similar price action Thursday. We opened up upside on Monday. Tuesday closing that out. Wednesday reaching in a little bit further, almost gapping down to 16.126. And with that lift with the rest of the market. Market profile on NQ, again, similar picture. Gapping up on the price action on Sunday, Monday open. Tuesday closing that out, Wednesday, Thursday, and then with a weekly opening price at $41.99, climbing up here to $42.29. Market profile on the ES, again, very similar picture. Opening price $1932.75 to $1942.50. Not much of a gain for the week. But again, taking care of unfinished business, as you can see, open gaps down here below, represented by the dash being taken out. So we'll go ahead and clear those out in the week to come. Before we start price action here on Sunday in a couple of hours, but price action settling up here around 1942.50. And once again, market profile on the CL. CL tends to take care of business a lot quicker. Doesn't leave many open gaps here. We see crude from Friday session to Monday session, and then closing that out on Tuesday, settling a little bit sideways at the highs here with, again, you know, each country coming up with OPEC as well, talking about costs, not costs, but cutting production, and who knows what lies ahead for oil. Again, we'll have people on both sides of the aisle telling us we're going up, we're going down. Simply trade the charts in front of you, you have a better shot. Weekly opening price on the oil was $33.53, so we actually finished downside. All right, let's jump into the big pictures. Let's start in with the crude, as we just mentioned. Again, a little bit choppy for this week, as price action waffled down there at the lows and then gave it a little bit lift to drop down. Key note on the Fibonacci, as we see crude up here. Again, we have major open repair when we talk. I love I love to see the market have open gaps and knowing that price action will eventually go close those. So that together with the big picture and the intraday picture makes for a bigger trend. But again, as an intraday, it's only what you can accomplish today. But as you may perhaps an ETF holder, as we'll go ahead and look at here in a little bit, do you hold on to the ETF as we work our way up to these lines, or do you wait for a certain break? Well, there it was. We talked, I mentioned in the beginning, running up to the 50 and the 200 period moving averages is exactly where we rejected here on the 50. Again, Fibonacci retracement, we're right at 61.8. Again, not being able to close above. Breaking trend here, moving upwards will be obviously a break above 50. And then my first look would be to at least come up here to around the 39s to close out that open daily gap. And so it's the 4-hour chart that I rely on to also indicate my, positive trend change. And again, the 51.44 just kind of chopping sideways. Price action we'll see on the coming week. Do we get the support here off the 144 and then push back upwards, or does price action come back downside? Again, if the shorter term picture on the 100 tick and the 4-hour on the T3 moving average are in green, and then we get green here with the 50 above the 144, I could tell you that crude's in a little bit of a quasi rally. It's going to take a longer time to get these monthly and weeklies upside, but again, once we start to show a little bit of a shift on the left-hand charts, the right-hand charts will be moving in that direction as well. Jumping into long-term TF, you can see price action for the week. We remembered gapping up on that Monday, Tuesday dropping down, and then Wednesday, Thursday, Friday with that lift here on the tick count on the 50 tick. Also the T3 moving average on a 4-hour chart, but there it was, the 50 crossing the 144 this week. Price action found some support down here. Check it out. You can see price action right here at the 51.44 and getting a lift. Again, daily picture, a little bit of a different picture when it comes to weekly and monthly. We definitely have time to push that back upside, but it was on the TF Russell. Here we can see right up to the 50 period moving average. Again, that daily gap, that hole there now gone. We can go ahead and erase that. Closed out on Tuesday. But price action, again, Fibonacci extension with holes still up above here as we work our way back. But pay note to the 50 period moving average on the TF Russell. Do we reject here, or do we push up even higher next week? Right now the consensus is at least the technical momentum finishing up on Friday that we're to the upside. We know that in a Globex session that could change easily, or U.S. Regular trading hours. It's the 4-hour chart in the left hand corner. If we are to come back down, watch for the 10-15-1 price retracement around this zone off the 50 period moving average, and then watch for the break upside above the 50 period moving average as we work our way up to the 200 period moving average above here at around between 1140 and 1160. Also watching the daily here on the TF as it works its way up to the T3 moving average crossover. YM, again, same picture as the other indices that we've talked about today, breaking above the 50 period moving average here on the Fibonacci chart. We did hit the 61.8. That's something to pay note of. Here we go, 61.8 was Friday's tap and bounced just below 200 period moving average right above here, working our way. And again, look at that. There we go, closing out a former right there. Bang, closing out the former gap right there. From back in the beginning of January. So market takes care of business. Again, we can go ahead and erase the former gaps here that we took care of business. But again, YM still with some price action. So do we run it up to the 200? Do we keep it here at the 61.8 and then come back down and take care of business? We can only wait for the chart to follow through. Again, you can watch any analyst out there. 50% will get it right. Half will tell you we're going up, half will tell you we're going down, and then obviously the outcome will be whatever it is. So combination of the Globex charts, a combination of the 4-hour chart. Right now 4-hour chart is in the green. So again, for the YM, you got to break above that 61.8. What's going to push above it? Intraday price action, Globex in the green. 4-hour chart is in the green. We might come down here, retest the 50 or the 144, and then push upside to the 200. Also possibility, volatility has broken upside here with price action holding above on the daily, above the 5 SMA. Weekly and monthly surely still have room to go. So Can go in either direction on the YM, but I know what I'm looking for if we're going upside to break above that 200, break above the 61.8, which is a trend change, and work its way up to the 200 period moving average. Long-term NQ, again, we've talked about the same picture this week. Price action holding up on a 4-hour chart as the monthly and the weekly. Here we have the daily already turning around, volatility above the 5 SMA. Again, same picture on the NQ, tapping the 50 period moving average, breaking above here. Price action on a fib retracement. We'll go ahead and draw a new one for the week, but bouncing off the lows from this entire month as we work our way into March. Last day of March tomorrow. Again, can most I can't say most likely, but we know end of the month, window dressing, who knows. But we can see price action again lift possibly here above the 50, run to the 200 period moving average, close out another open gap that we have below. But we did take care of business on this open gap here, so we got that one closed here. And so similar to the YM picture, as long as price action on the 4-hour chart, we could see it come down to 41.86, 41.58. Big picture still in the red, but the shorter term Globex and 4-hour chart puts us into that intraday setup, or at least to the short term setup as we go ahead and tag targets upside. The big concern will be that price action, just like the YM, has room to come down all the way down to here to close out this gap around 40.20. All right, long-term ES, as we can see, price action similar to the other indices, a little bit chop, drop down, and then lift on Wednesday, Thursday, Friday. Price action finding support off the 144 as we work our way upwards. Plenty of charts in the green, long-term picks still in the red, but short-term in Globex, and we are in the green for now, taking care of unfinished business. We bucked right here at the 50 period moving average, dropped down, so we had that open gap. There's that open gap from last Friday to Monday. Price action came down, closed it. We got that long candle downside, push back up above the 50 as Friday session. I was watching for this 1970 50, 1971 73 to close these out. ES, again, the probability was there. The probability was there that we're going to lift upside based on the fact that the Globex was in the green. Price action broke above the 50% and 50 period moving average, and we got a bounce off the 144 previously during the week, and we were holding upside in the green. The daily, the weekly, and the monthly are not playing a role here. It's the Globex and the 4-hour chart that gave me that view that perhaps we would go upside and tag some of those targets. So if we take a look, if we go ahead and take a look at the move, one of the best moves of the week, especially here on the ES, we had similar pictures on the other indices, but looking for all 4 charts. Again, this is intraday. This is not short term. We know that intraday there's going to be quick moves both directions. Always ready in both directions, but price action here towards the end of the session, you get a buy signal. You got your Heikin-Ashi bars in trend. You're moving upside, either looking at projection levels. This was right at the close, but on the 5144, technical momentum is now in the green. The 5144 chart is, again, emanating the same picture as the Globex, supporting the 5144. Let's go back right to that picture we were just looking at right here on the ES. You have your Globex in the green. You have your 5144 in the green, and your upside. You've broken above the 50% on the previous day's session on Thursday, and then Friday, I'm sorry, that was Thursday's move, not Friday's. That's Thursday's move. You started a momentum above, breaking above the 50% there, and so you look for the intraday setup, and the intraday setup puts you into the buy signal. And again, you're obviously out at the end of the session, but a nice trending move as price action found support here, still above the 144 and pushing all the way up into the close. And that's how you do it for the intraday session versus the short term. Now let's go ahead and let's jump into the short term as we're looking at ETFs, and we are looking at market cap leaders as well. All right, weekly ETFs. Let's start with the. Let's go ahead and start with the diamonds here. Taking a look at the diamonds, the YM. Again, similar picture. As we can see, the bigger picture on the bottom, we have the weekly and the monthly still in the red. On the diamonds, price action breaking above the 50. So watching that 144 as we watch the price action on the futures rise as well. But it's the short term here, 100 ticks to the upside. Diamonds here on a 4-hour chart on a T3 moving average versus the 51.44 here in T3 moving average. And then watch for the resistance that we saw here on a 4-hour chart. I'm sorry, 100 tick here. T3 moving average here on a 4-hour chart, and then the 51.44 here. So price action working its way upside, and obviously resistance here as we are we going for that 200 period moving average above? Yet to see. All right, let's go to the next chart. Take a look here at the FXE. FXE is price action. Again, we mentioned last week what exactly we were, or it was 2 weeks ago. We saw price action lift up on the euro here as price action was lifting up euro ETF here, and price action obviously came down with the price action on the U.S. indices moving up. So again, T3 moving average crossover downside 534 on the ETF. So we are now back in a downtrend here on the euro, as we can see price action crossed over on the 4-hour chart this week on a T3 moving average and breaking below that 144. Again, the reverse of what we'll see in the U.S. markets here, and the 4-hour on the daily chart back down below the 50 and 144. Again, bigger picture is still on a weekly and a monthly. Weekly, we had a couple weeks where we got a lift here in February. We're tapping right on the T310 and still price action downside on the monthly. So it's going to take the intraday picture, obviously, on the ETF to push back upside. Look for a quicker turnaround, but right now, obviously, we're in the bearish position. Trend momentum downside on the euro. All right, taking a look here at the gold. Gold, again, price action kind of mixed here on the 100-tick range chart is price action to the downside. 55 above 34, but the T3 moving average is downside. Again, we can see here gold kind of mixed here with price action not being able to push back above on the T3, but bigger picture on the 4-hour chart. Here's a 4-hour chart, 50 holding way above the 44, so consistent over the last couple weeks of gold holding upside. Again, resistance will be back down here around 113, and as well down here at 110 on the daily. Again, weekly has been holding all upside in the green, monthly making its way to turn around. So if we get that 100-tick ETF back up in the green, I believe we'll have all green above the board. So watch for the smaller intraday time set. Whether you're watching this on a 10-tick or a 20-tick should make for a fine trade to the upside, or at least a fine setup. Taking a look here at the IWM Russell. Again, we've been all in the green for the last couple of weeks, holding upside, green on the 4-hour chart, making our way on the 51.44 as price action broke above the 50. So as long as we've showing consistency, breaking above the 50 on the ETF, with the 100-tick in the 4-hour chart on the T3 moving average, the TF still has room. Watch that 106 on the ETF. And watch for resistance here on the daily right at 103.67. If we break at least upside, 110 would be the next line for resistance. Again, you're going to look for the intraday picture. Always be ready for, again, if you're trading ETF, I consider it to be holding on for longer term. So again, I go to the shorter. Here was the setup back here, or at least on a pullback. The better of the setups right here this week on Thursday as the Russell IWM push to the upside. But again, the initial crossover was way back a couple weeks ago. Again, we're going to wait for at least maybe a possible pullback below the T3 moving averages on both a 4-hour chart and a 100-tick range chart, and then look for the pullback entry back to the upside. Again, the concern will be any open gaps that we still have down below. Let's move to the next index here. As we can see on the triple Q, similar picture as price action continuing to the upside. Again, this is a nice pullback. T3 moving average comes back upside. Price action still holding upside here on the triple Q on a 4-hour, broke upside above the 50. Watch for that 105 resistance. Again, remember where the NASDAQ futures are, as well as the triple Q, finding some resistance right here at the 50. But remember, 50 below the 144 is supporting the daily, the weekly, monthly trend as well. All right, here we can see price action on the SPY. Price action holding to the upside here for the last, obviously towards the end of the week as we moved into Wednesday, Thursday, Friday session to the upside. SPY holding to the upside. Again, watch that 144 resistance. We hit that 50-period moving average, and here we can see the SPY right at the 144. SPY up here breaking above the 50, so showing some technical momentum of breaking upside. Watch that 199.16 on the 144. Again, weekly and monthly still have room to turn it around, but we're not yet there. Taking a look here at the USO oil as price action broke upside, holding upside like we saw in the crude futures, holding upside now on the 4-hour chart. Again, always pullbacks, better entries. So here you got a 4-hour chart supporting a move back to the upside. You got the 100 tick moving to the upside. You're watching the intraday setup. Again, wonderful move this week on crude. One of the best moves during the week. Went ahead and posted that this week. If I get to it, I'll show you that post again. But what a move. Price action, though, holding resistance here at the 50. So is this nothing more than a temporary shift? Well, we need a little bit more lift on the 4-hour chart. On the 50, 144, as you can see, the price action on the oil has always tried to break above this 50 with no, just slight push breakthrough here on Thursday. But until we get above that 50 and hold, it will take the Globex and the 4-hour charts to hold above that. And again, watch for the daily picture around 963, 9.63 here to break above that and work its way up to the 144. Eventually, the weekly and the monthly will catch up. All right, last group that we want to take a look at are our market cap leaders. As we move in, we review the market cap leaders. We have starting with Apple this week. Price action on Apple again, chopping at the lows here. Similar setup as we've shown you across the board on all the other pictures. Again, you're always looking for the intraday setup here on a 1,000-tick chart with a lot of volume Wednesday, Thursday, Friday. Volume on Apple lifting up. If you're trading the option, right now you have price action both on a 4-hour and a 1,000-tick lifting upside. Again, I'd want to see Apple break above the 50-period moving average. I'd be careful of the daily here as we get up to 100.15. Again, that will shift during the week as price action moves. But again, the big picture on Apple still to the downside. So it's looking for the intraday. If I have green on the top two charts here, and I've broken above the 50, and I'm at least approaching the 50 or broken above the 50 on the daily, the higher trend looks good for Apple, at least to the next level of resistance. Taking a look here at Amazon, a 500-tick range chart. Again, similar picture as we had a nice lift for the week, Wednesday, Thursday, Friday. We're in the green. Price action holding above 50. Again, my key concern on a daily here is the 50 is still above the 144. If we can break above that 50, 144, I think the Amazon has a chance of continuing run upside. The Amazon holding above on a monthly, found support off the T3 moving average so far for the month of February, and can see some additional movement upside. All right, taking a look at Facebook. Technical momentum is for the upside right now. Green, 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 green all around. We found support. There it was. That's all you needed. Bounce off the support last, what was this? The second week of February? Second week of February. Facebook found support. You're in a green trend. Nothing's changed here. But a 200 tick, yeah, found a little bit of chop here, but 200 tick found its way back in the green. And then 4-hour chart's been in the green. So again, a great opportunity to Facebook to the upside off some lows here back around February 8th. Now, again, found support off the 144, holding upside. So again, for the options or the intraday trader, right now Facebook doing pretty good. Technical momentum still remains to the upside. Taking a look at the Goog right here, 1,000-tick range chart. A little bit of chop here this week, but again, finishing upside with the rest of the market. Watch the resistance here at the 50, even though we're in an uptrend. So I have green. I want to see the follow through green, green. And then also be careful, the 4-hour chart. That's going to be a first indicator that it's supporting the 4-hour and the 1,000, these two charts on the upper left. If we could break above that 144, above 710 here, I could see then the daily lifting above the 50 and might continue that overall trend that we've been seeing on the monthly charts. All right, looking at Netflix, again, similar picture here. Price action in the green here. Price action lifting now above the 50. Watch the daily 99.36 and 102.46. That's something you want to be careful of. Again, the monthly picture's bit upside, but you got a Heikin-Ashi bar trending downside. Watch the moving averages crossover. So again, what do I want? I want to see price action. The truth here, it would be the daily picture. If we can at least break above the 50 and the 144, then an options entry maybe to the upside. Other than that, the technical momentum still to the green, but with some caution as we have some key resistance here on Netflix. All right, looking at Starbucks, again, green, green, green. Again, watch considerable 4-hour rejection here on the 144. And again, price action sitting in between that gap of the 51.44. That's something I always pay particular attention to. Downside Starbucks weekly, upside in the monthly. But again, if we can break above this 50, it will support this, be supported by the move here. Upside on the 200 tick as well as the 4-hour. Break above that 144 and you got a nice chance of a run upside on Starbucks. All right, one other thing I wanted to bring up before, it had to do with the intraday setup, includes the projection levels that each day we use in the trading room, where based on yesterday's low to high or high to low, taking the 50% line, moving it to the midnight open, being able to establish a target, both a target low and a target high. And again, a nice matchup is if we have momentum on the intraday range charts, the 51.44 is headed downside, and we got a target downside, or we are headed upside to a target high. Price action allows at least some usable tool for trade management. Again, it's not always a prediction to say once the market opens we know we're going to get the target low or we know we're going to get the target high, but a nice additional feature, a wonderful YouTube video presented by one of our members in our room today. I'll place that link in the video market recap here so that you guys can watch that. But again, if you're interested in using these target lows, target highs, which I'd say pretty much a 4 out of 5. That's a pretty good percentage. 4 out of 5 times during the week, price action tends to run to one of those. So the combination of that target low or target high in combination with the move. So for instance, I got a fib projection level here. I have an 80% projection level. Very closely related, but price action is running up there on a 51.44, and I see price action is moving there. That's one other feature that, or one other tool that I'll use in my bag to keep me in the trend. All right, looking to the week ahead, as mentioned before, we know that tomorrow, last day of the month, tend to be window dressing, as big money wants to make the books look good. So we know what's up ahead. We have 50-period moving averages, a little bit of resistance. We saw it on the ETFs. We know what's on the market cap leaders. We know that futures have 200-period moving days average up as well up ahead. We have some open gaps in both directions that can both be repaired, so we'll take for the intraday setup. But with window dressing, also remind yourselves that futures start to roll over in the next couple weeks. So really perhaps probably one more solid week of trading. Watch the volatility. We've had a lot of chop in the morning sessions, tending to give way to some amazing runs towards the end of the session. Oil still pretty much tied in with the index futures. So if I see oil running one direction, I've been tending to see those index futures move in the same direction. Somewhat strange, but hey, that's the market, and you got to trade the chart. So pay attention. We have in another couple weeks, so we have our next FOMC meeting, and then we have also Beige Book, which I believe should be out next week. Let's take a look at the calendar here. Yep. Where's that Beige Book? Actually, I think it's in another couple weeks. Let's see. I saw it. Maybe it was this week. I think it's this. There it is. It's this week. Here it is. It's on Wednesday. So Wednesday this week. That's the key thing. Go ahead. You can go ahead and check that out online. You can just go to the Beige Book link and be able to capture that, and you can read that ahead at your leisure if you feel like you have some idea where the FOMC is going to go. All right, so that's the big picture for this week. Again, keep in mind, I can't reiterate enough. You have econ data, you have beige book, FOMC coming up, you have contract rollover, you have window dressing as we work our way into the third month. And just always be ready. Wait till all your charts set up. Wait till you have the highest probability of trend. Do all setups work? No, they don't. But you obviously, that's trading. You always have to be ready for a market to turn in the other direction. So you have to be ready on your trade management. So make sure that you guys check me out on StockTwits or Twitter. You can find my trading tweets during the week where you can see any intraday setups that we had in the trading room, or there's any positive notes of market momentum trend. So you can check that out at stocktwits.com/tradingfibs. That concludes today's insight and to the state of the indices, our outlook and recap. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Before I wrap up here, guys, in the next couple weeks, I'll be putting out a weekly newsletter that will capture a lot of the pictures that are associated with a lot of things that we're reviewing here in the market review. So we'll tighten up the market review here a little bit, make the video a little bit shorter, but you want to make sure that you sign up for that newsletter so you get that to your inbox delivered on the weekend, and see where the technical momentum is, not only on the futures, but EDFs as well as industry indices. So looking forward to that. Hey guys, have yourself a Blue Zone day. Have yourselves the Blue Zone weekend, what's left of it, and I'll see you guys next week. Have yourselves a good day, a good night, and good trading.